Hello, this is Rob with Federal Finance CPE. Today we're diving deep into the SF-132, which is the Apportionment and Reapportionment Schedule. By the time you finish this training, you'll understand what the SF-132 is, what it contains, how it's structured, and how it's used in practice. We'll also walk through several real-world examples. So what is an apportionment? An apportionment is an OMB-approved plan for using budgetary resources. It limits the obligations an agency may incur for specific time periods, programs, activities, and projects, or any combination of these. Apportionments are legally binding. Any obligations and expenditures that exceed an apportionment violate the Anti-Deficiency Act, a federal law that prohibits agencies from spending more than Congress has appropriated or in ways Congress hasn't authorized. This is because apportionments are a vital stage of budgetary control. Think of it this way. Congress gives agencies budget authority, which is permission to spend money. Then the executive branch, through OMB, uses apportionments to tell agencies the specifics, how much they can spend, when they can spend it, and what they can spend it on. So some key concepts before we begin. First, apportionments and SF-132s are specific to what we call an account, essentially a specific pot of money that Congress has appropriated for a particular purpose. These accounts are organized by agency, bureau, and program. For example, NASA's Office of Inspector General would have its own account with its own apportionment that covers just the office's funding. These accounts are maintained by the U.S. Treasury Bureau of Fiscal Service, and you can find a full listing of these accounts in their FAST book, which is the Federal Account Symbols and Titles book. Another key point, apportionments aren't set in stone. They can be revised through what's called reapportionments. This is for two main reasons. First, OMB might decide to reallocate funds differently throughout the year based on changing priorities. Second, if Congress provides additional budget authority through supplemental appropriations, agencies will need a new or revised apportionment to access those additional funds. Now let's talk about how OMB controls spending through apportionments. There are three ways. First, by time, typically breaking funds into quarters so agencies can't spend everything at once. Second, by program, limiting how much can be spent on each major activity within an account. Third, by future years, setting aside some funds for spending in later fiscal years. OMB can also combine these methods, like limiting both the program and time period for spending. You can push budgetary control out to future years, but only with certain types of funds. Here's why. Annual funds must be obligated within one fiscal year. Use it or lose it. But multi-year funds remain available for obligation across several years, and know-your funds never expire. So only multi-year and know-your funds can have funds set aside for future years, since annual funds expire, if not obligated, by September 30th. Finally, I want you to understand impoundments, which are actions where the executive branch either delays or seeks to reduce spending that Congress has authorized. There are two types of impoundments. First, deferrals, where OMB delays the release of funds until later in the fiscal year. This is allowed as long as the agency still has time to obligate the funds before they expire. Think of it as strategic timing rather than refusing to spend. Second are rescissions, where the executive branch formally asks Congress to cancel budget authority that's already been appropriated. For example, the president might say, Congress, you gave us $100 million for this program, but we only need $50 million. Congress then decides whether to agree. If Congress approves the rescission, they pass new legislation reducing the budget authority. If Congress disagrees or takes no action, the original funding stays in place and must be released to the agencies to be used per law. The executive branch can temporarily withhold funds while Congress considers a rescission request. However, if the request comes too late in the fiscal year, leaving Congress insufficient time to respond, this is called a pocket rescission, which violates Congress's ability to choose what to be spent when and how much. So even if Congress says no in this case for the rescission, there isn't enough time left in the fiscal year to actually obligate the funds before they expire. So which funds require apportionments? You might be wondering which ones require a 132 apportionment schedule. The basic rule is simple. All Treasury appropriation fund symbols require apportionments, except those specifically exempted by law. Here are the main situations where you won't see an SF-132. The first is when the entire account is exempt by law from apportionment. Second, when all of the budgetary resources have expired. An expired fund is one that has passed its period of availability for new obligations. For example, FY 2022 annual funds expired on September 30th, 2022. When funds expire, agencies can only make outlays against existing obligations, but they cannot create new obligations. Remember, apportionments tell agencies what they can obligate and when. If funds have expired, no new obligations are allowed, so nothing left to control, hence no need for an apportionment schedule. Third, if all budgetary resources have been fully obligated before the fiscal year begins, no apportionment schedule is needed. There's nothing left to control. And fourth, if budgetary resources are available only for transfer to other accounts, they also do not require an SF-132. These are the most common exemptions you'll encounter. In practice, you'll mainly ask two questions. Is this account exempt from apportionment by law? And have these funds expired? So now let's look at the actual SF-132 document. The SF-132 comes as an Excel workbook with 3 tabs, which we'll review shortly. The main apportionment tab is organized into 3 sections. The top section contains the apportionment details, basic information about the account and funding sources. The middle section shows total budgetary resources, all the money available to spend. The bottom section shows the application of budgetary resources, how OMB is telling the agency to control that spending. Now, top section, the apportionment details. First, you'll see the fiscal year. In this example, FY 2024 apportionment is telling you which year's funding this covers. Next is the public law reference, like Public Law 118-42. This matters because it shows you exactly which congressional appropriation provided these funds. You can look up that public law to see the original amounts Congress authorized and any specific conditions they included. This creates a clear audit trail from congressional intent to agency spending authority. Here's the constitutional framework. Congress creates laws that provide budget authority to spend taxpayer money. The executive branch through OMB then divides that budget authority among agencies via apportionment. Critically, the total of all apportionments cannot exceed what Congress appropriated. This ensures that the executive branch can't spend more than Congress authorized. Moving down the form, you'll see the organizational hierarchy. First, the agency, in our example, NASA. Then, the Bureau, which is a subdivision within the agency. In our case, the Bureau is also NASA because it's a smaller agency. But in larger departments like defense or agriculture, you'll see distinct bureaus. Finally, you'll have the specific account name. Here, it's the Office of Inspector General, which represents a particular pot of money within NASA for a specific purpose and function. Next is the TAFs, the Treasury Appropriation Fund symbol. Think of this as the account number that Treasury uses to track specific pots of money. The TAFs has several parts. The first digits, in our example, 080, are NASA's agency identifier number. Treasury assigns each agency a unique code so they can track funds across the entire federal government. The next part shows the period of availability, 2024-2024. This tells you when the funds can be obligated or when they're unexpired. The format is beginning year, ending year. Since both dates are 2024, this is an annual fund that must be obligated within the fiscal year of 2024 or 1 year. A multi-year fund might show 2024-2026, meaning you can obligate these funds anytime in 2024 until the end of fiscal year 2026. For a no-year fund, instead of dates, you'll see just a / and an X after the main account number, which is the last 4 digits in our example, 0109. And they identify the specific purpose for these funds within the agency. The Treasury's Bureau of Fiscal Service assigns these codes to track different funding purposes. So a no-year fund, TAFs, would look like this: 080-0109 / where the X indicates these funds are no-year funds and do not expire. Now let's cover the other elements you'll see on the SF-132 lines: line numbers, line splits, descriptions, OMB actions, and footnotes. Line numbers serve different purposes depending on which section you're in. In the top section with basic account details, the line numbers are just for organizational use. But in the budgetary resources and application sections, these line numbers correspond to specific lines defined in OMB Circular A11 Appendix F. This standardization helps you connect information between the SF-132 and other budget reports like the SF-133. Line splits provide additional detail about specific lines using standardized codes. For example, when you see 3 in the line split for iteration number, this tells you this is the 3rd version of the apportionment for this account. Agencies start with iteration 1 for their first apportionment request of the fiscal year, then number subsequent versions sequentially. This helps track how many times the apportionment has been modified. Next is reporting categories, which shows yes or no. This indicates whether the account uses program reporting categories, which are special codes that break down spending into more detailed program areas. When set to yes, agencies must report their obligations on the SF-133 using these specific program codes. When set to no, agencies report obligations according to the standard apportionment categories we'll discuss. The SF-132, by the way, is the monthly report agencies submit to show how they're actually spending against their approved apportionments. Finally, there's adjustment authority, which shows a yes or a no. When it says yes, OMB has pre-approved certain types of budget adjustments that the agency can make without requesting a formal reapportionment. This saves time for routine adjustments, like updated estimates of recoveries or collections. When it says no, any change requires formal OMB approval through a new reapportionment request. The specific adjustments allowed are detailed in the footnotes section. Now we move to the total budgetary resources section. But first, let me explain some additional line split codes you might see. For accounts that mix discretionary and mandatory funding, or have both estimated and actual amounts, the line splits in this section use letter codes D for discretionary, M for mandatory, E for estimated, and A for actual. So DE means discretionary estimated, MA means mandatory actual, and so on. You'll only see these codes on accounts that need to distinguish between the different types of funding, discretionary and mandatory, which just means if you only have one type of funding, you will not see the discretionary or the mandatory code. You can still see the actual or estimated code if appropriate. The middle section, total budgetary resources. The budgetary resources section shows two main things: any unobligated balances carried forward from a previous fiscal year, and all types of budget authority available to this account. Before we dive in deeper, you should know there are only 4 types of budget authority in the federal government. First, appropriations, budget authority that permits agencies to incur obligations and make payments from Treasury for specific purposes, which is by far the most common type of budget authority you'll encounter. Second is borrowing authority, which is budget authority that lets an agency borrow money, then obligate against those borrowed amounts. Third is contract authority, budget authority that allows an agency to incur obligations before receiving appropriations, with the understanding that future appropriations or collections will cover those obligations. Fourth is offsetting receipts and collections, which is budget authority that lets agencies obligate and spend money they collect from fees, sales, or reimbursements from other entities. The budget authority will also specify whether it's discretionary or mandatory, an important distinction. Discretionary spending comes from annual appropriation acts that Congress debates and approves each year. These are the funding decisions Congress actively makes during the appropriations process. Mandatory spending, also called direct spending, is controlled by permanent laws rather than annual appropriations. This includes entitlement programs like Medicare, food stamps, and veterans' pensions, plus interest on national debt. Congress doesn't vote on these amounts annually. The spending happens automatically based on existing law and eligibility rules. The bottom section, application of budgetary resources. The final section is the application of budgetary resources, where OMB tells the agency exactly how to control their spending. OMB uses 3 main control categories. Category A controls spending by time periods, which are typically quarters. Category B controls spending by the program or activity. And category AB is actually a combination of those two, which is both time and program. For example, limiting a specific program to specific quarters. And then category C reserves funds for future fiscal years. In our NASA Office of Inspector General example, we see 2 category B lines, direct program and reimbursable program. This means OMB is controlling spending by program type, not by periods. The agency cannot spend more than the specified amount for each program. If they exceeded $390,000 on the reimbursable program, for instance, they would violate the Anti-Deficiency Act. This program-based control ensures that the agency spends money on the right activities, not just within the right time frame and overall amount. For those working in internal controls, apportionment tracking is a complex but critical area to examine. Agencies often have multiple programs per account, plus time-based controls, creating a web of spending limitations. During your control testing, work closely with budget staff to understand how your agency tracks and validates spending against these various categories. The USSGL provides account attributes to support this tracking, but it can be challenging for new professionals to do so. And one technical note, while Category C appears in OMB A11, you will not find it as an account attribute in the Treasury's Financial Manual Chart of Accounts. Before we move to the additional tabs, two important columns show up throughout the SF-132. The OMB Action column contains the actual dollar amounts that OMB has approved for each line of the apportionment. And here's a critical control point. The total budgetary resources available must equal the total application of budgetary resources. You'll also find a footnote column that references specific footnotes using codes like A1, B2, etc. Footnotes starting with a B refer to budgetary resources section, while those starting with A refer to the application of budgetary resources section. The numbers simply indicate how many footnotes apply to each section. Additional tabs. The SF-132 Excel workbook also contains two additional tabs. The second tab contains the footnotes in details. These footnotes provide account-specific instructions and clarifications that aren't generic or boilerplate. They contain important details about spending restrictions, allowances, or specific requirements for your particular appropriation. For example, a footnote might explain why certain budgetary authority was reduced, authorize specific types of transfers, or allow adjustments without requiring a new apportionment request. Always read these carefully, as they often contain critical information for managing the account properly. Now, let's walk through some real-world SF-132 examples. If you want to follow along, you can find all federal apportionments apportionment-public.max.gov. This publicly available website contains apportionments for the current fiscal years and previous years, making it an excellent resource for understanding how different agencies structure their budget controls. Our first example is an FY 2024 apportionment for the Department of Agriculture. The funding comes from Public Laws 117-2 and 118-42. The Bureau is Executive Operations and the account is Working Capital Fund. The task is 12-4609X. The agency ID is 012 for agriculture. The main account is 4609 and the /X that indicates it's a know-your fund that never expires. Moving down the form, we see that this is iteration number 3, meaning this account has been reapportioned twice already that fiscal year. The apportionment date shows when OMB approved this version. The reporting categories field shows no, and the adjustment authority shows yes, meaning the agency can make certain pre-approved adjustments without requesting a new apportionment schedule from OMB. We'll see exactly what adjustments are allowed when we review the footnotes. In the budgetary resources section, all funding is discretionary. We start with unobligated balances brought forward, money left over from the previous fiscal year, shown as discretionary actual, or D, since the amount is known. Then we see several types of budget authority: regular discretionary budget authority, obligated balance of appropriations permanently reduced with footnote B1, anticipated non-expenditure transfers net with footnote B2, and spending authority from anticipated collections and reimbursements. These all add up to the total budgetary resources available. The application of budgetary resources section is interesting because it combines Category A, time-based, and Category B, program-based controls. We see two Category A lines for quarterly controls. The first quarter shows a positive amount, while the second quarter shows a reduction, meaning OMB initially allocated funds for quarter 2, but then pulled back some. We also have Category B line for project awarded TMF funds, totaling $16 million, which controls spending on a specific program throughout the fiscal year. The total has footnote A1, which we'll examine next. Now let's look at those footnotes to understand the specific instructions for this account. Footnote A1 explains the adjustment authority we saw earlier. The attached apportionment includes unobligated balances carried forward from FY 2023, estimated receipts and anticipated spending authority from offsetting collections. To the extent authorized by law, these amounts may be increased or decreased for indefinite appropriations, actual unobligated balances, actual recoveries of prior year obligations, actual reimbursements earned, including reimbursements and offsetting collections from non-federal sources, contributions from non-federal sources, and release of contingency funds without further action by OMB. The footnote continues, transfers of funds authorized by law to or from any of the accounts listed may be made without further action by OMB. This gives the agency significant flexibility to move money between related accounts so long as it's legally authorized. The footnote also indicates that this account has received or may receive an automatic apportionment, meaning some of the funding decisions happen without requiring a formal OMB review. Now let's look at the budgetary resources footnote. Footnote B1 explains the obligated balance of appropriations permanently reduced line. Footnote B1 references a specific law that rescinded 78 million unobligated balances from prior year appropriations made available in the working capital fund. 78 million are hereby rescinded, provided that no amounts may be rescinded for amounts that were designated by Congress as emergency requirement pursuant to a concurrent resolution on the budget or the Balanced Budget and Emergency Deficit Control Act of 1985. This explains why we see a negative 78 million in the B1 line. Congress took back funds that hadn't been spent yet, but protected any emergency designated funds from the rescission. Footnote B2 explains money transferred from another account with TAFs 47-0616 2021/2025, agency ID 47, main account was 0616, and it was available from 2021 to 2025. That footnote states these funds were transferred for USDA supply chain risk response as recommended by the Technology Modernization Board pursuant to a written agreement between GSA and the Department of Agriculture. This shows how agencies can move funding between accounts to address emerging priorities, but it requires proper legal authority and documentation. These footnotes show how you can trace unusual amounts back to their source, like why we see a negative budget authority, it was rescinded, or where transferred funds came from. The approval section now shows the Deputy Associate Director for Natural Resources signed this apportionment, along with the signature date and the specific accounts included. Now let's look at our second example, moving through it more quickly. This is also a FY 2024 apportionment, but with some different characteristics. This example shows NA for public law, meaning there's no new appropriation provided the funds for this particular apportionment. It's for the Department of Homeland Security, FEMA Operations and Support Account. The TAFs is 070-070/X, another know your fund that never expires. This iteration number is 1, with an NA for last approved apportionment, indicating this is the first apportionment request of the fiscal year. Both reporting categories and adjustment authority show no, meaning standard reporting rules apply and no pre-approved adjustments are allowed. In the budgetary resources section, we see unobligated balance brought forward of 53 million on line 1000. The line split code E indicates it's an estimated amount rather than actual. And moving down, we have anticipated recoveries of prior year unpaid obligations, then anticipated non-expenditure transfers of advanced appropriations totaling $12 million with footnote B1. We'll examine that shortly. In the application of budgetary resources section, we see 3 lines, 2 category B program controls for disaster relief fund and federal assistance, and a third line showing funds apportioned in FY 2025. This third line is our category C example, funds reserved for future fiscal years spending. Notice that the total budgetary resources available exactly matches the total application of budgetary resources, confirming our budget equation balances. Now let's examine those footnotes. Footnote A1 states, if a programmatic need arises in FY 2024 for obligations and funds currently apportioned in Category C, the agency may reallocate the Category C amounts to application Category B lines without further action by OMB. OMB shall be notified of such action within 10 business days. This gives FEMA flexibility to move money from future year reserves to current year programs if emergencies arise, but requires prompt notification to maintain oversight. Footnote B1 explains the anticipated non-expenditure transfers lines pursuant to Public Law 117-58, Infrastructure Investment and Jobs Act. Up to 3% of each fiscal year's allocation may be transferred to O&S for salaries and expenses. This shows how specific laws can authorize automatic transfers between accounts, in this case allowing up to 3% of infrastructure funds to cover salary and expenses for O&S. The approval page shows the signature of the Deputy Associate Director for Transportation, Homeland, Justice, and Service Programs, along with the approval date and the account included. Our final example comes from the Department of Veterans Affairs, also for FY 2024. This one shows multiple public laws rather than listing specific legislation. You'll notice apportionment schedules tend towards brevity. When an account is funded by numerous appropriation acts, OMB can use this summary approach rather than listing every individual public law. This is common for large and complex agencies with funding from multiple sources. This apportionment is for the Department of Veterans Affairs, with the Bureau listed as the Department Administration and the account as National Cemetery Administration. The specific account name is National Cemetery Administration Facility Operations, with TAFs 036-5392/X, another Know Your Fund. This is iteration 1, the first apportionment request of the fiscal year. Reporting categories show no, but adjustment authority shows yes, allowing certain pre-approved modifications. In the budgetary resources section, we can see both actual and estimated unobligated balances brought forward, $0 for actual and $757,000 for estimated. This likely means that at the time this apportionment was prepared, the agency knew they would have carryover funds but didn't finalize the exact amount. Later in the fiscal year, you'll typically see this converted to actual amounts once they have final prior year balances confirmed. We see two types of recoveries. Line split 1 for anticipated recoveries of prior year unpaid obligations, and line split 2 for anticipated recoveries of prior year paid obligations. This distinguishes between monies recovered from canceled obligations versus actual refunds received. The budget authority is mandatory spending. Mandatory appropriation special trust of $300,000. Notice there's no M designation in the line split because the entire fund is mandatory spending. We only see discretionary and mandatory codes when a single account mixes both types of funding. The application of budgetary resources is straightforward. All funds are allocated to a single Category B program, National Cemetery Facility Operation Fund. This simple structure reflects the account's focused mission. Now let's examine those footnotes. We have footnote A1 referenced in the total application line and footnote B1 referenced in the budgetary resources section. Footnote A1 says, to the extent authorized by law, the estimated amount of recoveries of prior year obligations may be increased without further action of OMB. Revised estimates will be submitted to OMB within 10 days of publication of month-end accounting reports. This gives VA flexibility when recoveries exceed estimates. They can spend the additional recovered funds without waiting for a new apportionment, but must notify OMB within 10 days of their monthly financial reports. This connects the SF-132 and SF-133 reconciliation process, where agencies report what actually occurred versus what was planned. Footnote B1 references OMB Circular A11, Section 120.21. One or more lines in the Budgetary Resources section may be rounded up. As a result, those rounded lines do not match the actuals reported to the SF-133. Agencies will ensure that its funds control system will not allot actual amounts in excess of these amounts available. This technical footnote addresses a common issue. When OMB rounds numbers for simplicity, agencies must ensure their internal systems only allot the actual amounts that are available, not the rounded apportionment figures. The approval section shows the signature of the Deputy Associate Director of National Security Programs, the approval date, and confirms the account included in this apportionment. So how are apportionments created? So now that we've examined SF-132 in detail, let's discuss how they're created. Agencies prepare their own apportionment requests and submit them to OMB for approval. This process happens through OMB Max, a secure web-based system where agencies can log in to submit requests and track their approvals. This ensures proper documentation and maintains the separation between agency requests and OMB's executive oversight role. Here are some technical details about apportionments. There's no required number of lines, but there is a 125 line maximum. OMB A11 guidance asks agencies to be as concise as possible. Use fewest lines as necessary, while remaining clear and specific. Also, all amounts must be whole numbers. No cents or decimal points allowed. This keeps the documents clean and focused on the bigger budgetary picture rather than precise pennies. And now, conclusion for today. That we've covered a lot of ground, but now you understand the SF-132's critical role in federal budgetary control. When you encounter these apportionment schedules in practice, you'll be able to identify the specific account, recognize which iteration you're reviewing, understand the total budgetary resources available, and see exactly how OMB is controlling that spending through time periods, programs, and future years allocation. Remember, these documents represent constitutional framework in action. Congress appropriates, and the executive branch, through OMB, apportions, and agencies execute within those legal boundaries. This is Rob with Federal Finance CPE. Thank you for joining me today, and please stay tuned to our next training